Well, at this point, we have covered the income statement. We've talked some about the retained earnings statement, and we have discussed the balance sheet. So that leaves one financial statement left, and that is the statement of cash flows. Our first question says, if a shareholder or stockholder, owner, however we want to call them, they're all the same thing, wanted to know how money flowed into and out of the company, which statement would the shareholder use? Income statement, statement of cash flows, balance sheet, statement of retained earnings. And see, we've been calling it the retained earnings statement. Now here we're calling it the statement of retained earnings. So I just want you to know those two are synonyms. Okay, well, the income statement determines net income or loss for a period of time. And when we say money here, we're talking about cash, actual cash. And if we think about the accrual basis of accounting, we can book revenue without receiving the cash, so income statement is not correct. The balance sheet will tell us how much cash we have on hand, but it won't give us this information, how the money flowed into and out of the company. And the statement of retained earnings is really just an extension of the income statement. So the answer is statement of cash flows. So if our cash balance goes one year from, say, $50,000 to $100,000, you know, how did that take place? So we'll get into the statement of cash flows a little bit in more detail later in the course, but for now, if we associate the statement of cash flows with how money flows into and out of a company, I think that's good enough for now. Okay, says here, let's see if we can get this straight. It says, cash investments made by the owner in the business are reported on the statement of cash flows in which section? So we've got financing activities, investing activities, operating activities, and then supplemental statement. Now, the supplemental statement is not something that we're really even going to get into in this class. We might discuss it briefly in the very last chapter we cover. So let's think about what these are. Financing means how do we get the money to do something that we want to do. So think about it. You can maybe go buy a house for $300,000. You don't necessarily actually have to have $300,000. You might need $50,000 or $60,000 as a down payment. But the bank is going to loan you the rest of the money. Okay, so that's what we're talking about, financing. Investing. Well, when you invest in the house itself, you're making an investing action. Okay, and then operating is what we're doing in the ordinary and necessary course of business. So we have to be careful here because it says cash investments made by the owner in the business are reported on the statement of cash flows in. Now, be careful here. The answer is financing. So I want you to understand that what we're really asking here is it is the business's statement of cash flows, not the owner. The owner is an investor in the business. But for the business, that money that came in is a financing activity. So whether the company gets the money from a bank or from an individual, they sell bonds, whatever the case may be, that cash investment from the business's perspective is a financing activity. Now, for the purpose, for the owner, again, when they put the money into the business, they're investing in the business, but this is the perspective of the from the business itself, if we were to think of the business as its own entity. Okay. Last thing we're going to do, it says a summary of cash flows for Linda's Design Services for the year ended December 31st is shown below. The cash balance as of January 1 is $40,600. Prepare a statement of cash flows for Linda's design services for the year ended December 31st. Okay, so I'm not going to write out all of this stuff up at the top, and I'm not even going to do this in good form. What we're really trying to do is we're trying to identify which of these activities are operating activities, which are investing activities, which are financing activities, and what is our final cash balance. Because notice it gives us the January 1 balance, but it doesn't give us the December 31 balance. So what we're going to do, let's see, operating, investing, and financing. Okay, so cash receipts, cash received from customers. This implies that we're operating our business, and that would be an operating item. So we're going to come here, see, what was that? 83,990. Okay, and I'm just going to write that down as 83,990 because it's a positive number. Cash received from the sale of stock, 25,000. I want you to understand that when this owner, and we've covered this in the PowerPoint presentations, and then we also covered it in one of the other exercises. What is this owner getting for his investment? He's getting stock. She is getting stock. So this is cash received from the sale of stock is the exact same thing as what we have going on up here in this prior question. So we have $25,000 received from financing activities. Cash payments, cash paid for expenses. These are operating expenses. I want to put those in brackets to indicate that that is a negative number. Move this up just a bit. Cash paid for land. Okay. If you recall, in our PowerPoint video presentation, we had a transaction like this. This one, however, is not for $20,000, it's for $47,000. So we're making an investment. We're making an investment. Presumably we're going to build something on this land, so that would be a non-current asset. This is an investing activity of $47,000, and it is a cash outflow, so we're going to put it in parentheses. Cash paid for supplies, $410. Supplies are used in the ordinary course of business, so we're going to put $410 here under operating. And then dividends. Dividends are a return on owner investment. So when we pay out cash dividends here, what we're saying is essentially we're paying part of the financing back. We only had one investing activity, so we can go ahead and do that. Financing, we had $25,000 inflow, $5,000 out. I think we can probably do that math in our head. $20,000. And then let's bring our calculator over here. We had cash receipts of $83,990 minus $27,000 in expenses minus $410 for supplies, and that's going to give us $56,580 as a positive number. Okay, so remember we started here with 40,600. So what we essentially have here is we generated 56,580 from operating activities minus 47,000 from investing activities, okay, plus $20,000 from financing activities, plus this 4,600 here. Let's see, 40600 equals 70,180. So our December, let me move this up here, our December 31 balance equals $70,180. Okay, and we've done two things here. We've determined our ending cash balance, and we've gotten some practice with identifying each of these items as operating, investing, or financing activities. All right, let's wrap this video up.